My most successful people are committed out of the gate, the ones that have the fastest success. The people that come out, they're realistic, they get that on their schedule and they do the things they're supposed to be doing. And I have some people that are a little bit slow to start and they have some other things going on, but I commend them for starting.
Welcome, everyone, to our Hero Capital Show. I'm your host, Tim Mai, and today I have the man, the myth, the legend. He's a top coach for over 19 years, amazing long time in the Art Mentor community, which I am now a proud owner of. And Don has mentored over 1,800 investors in the last 19 plus years that he's been a coach in the RE Mentor. I think, are you is it you or Craig? Who was the coach first or at the same time?
Depends how you look at it. We were business partners. So
Oh,
actually, he asked both of us at the same time. And when he tapped us on the shoulder and said, "Hey, I want you guys to be my first coaches in this program." Yeah, we were honored to do it. And here we are almost 20 years later.
wow.
So you
That's
couldn't wait,
amazing.
couldn't have waited to buy it till the springtime, so I could have made my 20 years.
It will be here pretty soon, right?
Yeah.
I know everyone within the program knows you as the underwriting guru, and you're an expert on that. So I'm definitely going to interview you more on that. And I know
Great.
you have done plenty of multifamily yourself, plenty of capital raising yourself. So we're going to dive into all of that today. And then I see that you're also a co-founder, co-creator of Flag for Hope. Love to
Yes.
learn more about that as well. So with that, everyone, give mentor coach Don Goff a huge Texas welcome, y'all. Woohoo!
Thank you, guys.
You,
Thank you,
you,
Tim. Appreciate the welcome.
yeah, your New York accent and my Texas accent sound a bit different.
Oh, just a little bit. That's why I had cowboy boots on at the last UP, and I had to just explain to everyone not to get confused with my boots on because I am from Rhode Island.
All right. Yes, Don, if you can share with everyone a little bit about your journey. How did you get into real estate investing and then how did you become a coach in the RE mentor community?
Sure. So I had gotten started because actually Craig said to me one day, I'd known Craig since the fourth grade.
Oh,
And he
wow.
said, yeah, so I was watching him. I was in corporate America. He didn't know I was watching him, but I was watching him do he had a few different little deals that he did, a few multifamilies, three families. And one day he just said to me, hey, I'm doing multifamilies, right? And I'm like, yeah. He's like, hey, the next time I find a good deal, is that something you might want to take a look at with me? I'm like, yeah, absolutely. I was chomping at the bit because he didn't know I'd been watching him the whole time, hoping, but he had a business partner, so I never mentioned anything. So long story short, that happened. Saw an infomercial on flipping properties. We went to a seminar. They said, go to your local real estate club meetings. We went to three of them. We tripled everything they told us to do because we wanted out of corporate America. I was an engineer, he's in sales. And one of them was Dave Lindahl's. His was the furthest away, over an hour away. And we didn't know who he was. We just know we wanted to go to the closest real estate club meetings. So we went there, got to know Dave. We would help people while we were there. In the single family, I started off with wholesaling and flipping properties. And so we're at the event and got to know him. I actually took on his courses to get into the larger buildings. And then, yeah, after a couple of years, he asked us, hey, I'm starting this program. I'd like you guys to be my first two coaches. So that's pretty much how I got involved in doing that, just going out there networking, doing what you're supposed to be doing and sharing and trying to help people, and just that opportunity opened up.
That's amazing. That's awesome. Yeah, I think that's probably about when I first heard him speak. I believe I first heard him spoke in 2003. So I got started in real estate in 2002, heard him spoke in 2003, bought his apartment riches course back
Yes.
then. And yeah, here we are like years
Tim, the
later.
funny part is that hotel we were at for the event we were just at, it was a mile away from there that he hosted his event. And that's where we first met Dave. Didn't know who he was, like I said, but that's how we got to know him. But yeah, so you've been in it a little bit longer than I have. And I actually met Dave in 2004. And
Okay.
so, yeah, you got him right at the beginning.
Yeah, for sure. Very cool. Along the way, how did you become known as the underwriting expert?
Yeah, so when I started Dave's program, I just love numbers. I have an engineering background. I went to school for engineering before I got out of corporate America. I was in a computer company, a thermal engineer. Just love numbers, what I like to do. So my business partner, he did the front end, I did the back. We focused on our strengths. And when Dave took that on, I just love the numbers. I kept on optimizing the underwriting template to what it is today. And so I was the one that kept on optimizing it, make it better, adding performers on it and so forth. So we've been using my template since pretty much since the beginning. We started 19 years ago with the program. Everyone uses that. That's what they train on now. And that's how I got detailed. Dave's a high level guy, so I actually even reviewed his stuff when he first started going out because he used to call me, "You're my engineer," because I was the details. He didn't like getting to know all the cracks where I did. So it's funny, and I just love doing it. That's how I got known to be the number cruncher, the underwriter, and then I started my own program just last year as well.
Yeah. And one of the things that's very interesting, because a lot of people who love the underwriting side where they go deep into underwriting, they usually don't take on capital raising unless it's like a necessary evil. It's their own
Yes.
deal. They gotta help raise money for this deal. But you actually play both sides of that. You do the underwriting really well, and
Yes.
then you also do the capital raising really well. What is it about your personality that allows for both to be able to get good?
Yeah, so I was an extrovert. I just like talking to people. My partner was an introvert. And so I would go up and talk to everyone, and then I'd bring him over because after I wanted to meet everybody. So I would only talk 5 or 10 minutes, but if I found someone good, I'd bring him over to it. So when we started, and I share this when I coach, focus on your strengths because if you love doing something, you're going to get really good at it. And there's different capital raising, underwriting, talking to brokers, whatever part of the business you're in or that you love. So he was doing more of the front end stuff and I was doing more of the back end. But I also say is doesn't mean you don't learn everything else. And everyone has a network, right? So he had his network, I had my network, and we combined since we're from the same area. So it's nice when two people are doing something, get a little bit more credibility. So just sharing. I didn't really go out there and pitch people. I was more just sharing what I did and how I was excited about it in the background and just kept on filling the funnel as we went because I didn't have to go out there and do that. So that's how it morphed in. So I kept on learning that more. And on the sales side, and I always had an entrepreneurial spirit, but I wasn't the visionary because I was the details guy. I'm like 30% entrepreneurial and then 70% of being the right-hand man person. So that's how it all happened. And then we kind of, over time, meshed in the middle where he did more of that underwriting and then I learned more of the front end and then both became good at everything and just divided and conquered because when you're doing some of the same things, obviously it's not efficient.
Yeah, that's really good. It's interesting to hear an extrovert who loves the numbers crunching
I'm not
writing. That's
normal. I
like
never said that. I know I don't fit the common mold and I don't know what happened. It's funny at our school because I went to Worcester Polytech and MIT. Everyone knows MIT is the best or one of the best engineering, but a lot of people joke around and said people from WPI manage the people, even though they did better in school and everything. We managed them because we were more well-rounded. That was WPI's model sort of thing. So it's you need both types. You need people that can be an extrovert and understand so they can explain it to other people, or some people just want to be behind totally. And that's what's great about this business is find the people that focus on your strengths, delegate your weaknesses.
Yep. Let's talk about that. You
Yeah.
have coached over 1,800 people. That's a lot of
Mhm.
students you've coached. And I'm
Yeah.
sure you have had students all spectrums of success, right? From ones who never took action and didn't do anything to ones that have probably bought hundreds of millions of real estate. And let's talk about some of what you
Sure.
have found to worked well for students, the one that succeed, and then also what didn't work for the ones that didn't succeed.
Sure.
I know it's a big one, but we can take it in bite
Eat us
size.
a bunch of times, so I'm ready for it. Because it's everyone wants the magic sauce, right? And what's going on? What takes it to be successful? And it really isn't the real estate stuff. It's really people have a hard time when they're going from corporate America when they have a boss, right? So owning your own business is a double-edged sword. It's the great because you have the flexibility being your own boss. You only have to answer to yourself. The bad part is you only have to answer to yourself, right? Everyone's busy. All 1,800 plus people were busy. My mom's busy. She's retired. And I always tell people, busy doing what? I tell them, you paid a lot of money for this program. What's your commitment? What's going to happen as far as what are you going to commit? How many hours do you want to commit? And get that on your schedule. Because if you want to treat it like a hobby, you're going to get paid like a hobby, right? And that's just reality. If the grass is greener where you water it, right? So if you're not putting the time in consistently, whether it's your health, going to the gym or whatever, you're not going to make the progress. You're not going to get the momentum. So that's one thing. The other thing is, so getting a calendar, running business hours, to be honest, that's the number one thing where the people don't have success because people ask me, what's the percentage? Everyone wants to know when they come. What's the percentage to see if this is going to work for them? I say 100%. They're like, what? There's no way. You're full of it. I said, yeah, 100% of the people that want to. And I said, but you'll be successful. If you keep doing the things you're supposed to be doing on a regular basis, you'll be successful. I can't tell you if it's in 2 months, 4 months, but you will be successful. So that's one of the big things. And then being coachable. Some people want to go and reinvent the wheel. They go off and do all these other things. And I'd ask them, I'm known to be a little bit of a stickler because they pay for accountability. So I'm going to give it to them. Right. And it's, what did you do the last couple of weeks? And did you do the stuff that I sent you? I've been coaching for 18 years. I'm handing it to you on a silver platter. And then some people want to go off and listen to 20 audios. Why? Because it's easier. They don't want to get on the phone or stuff like that. So I guess that's the biggest thing, is just treating it like a business and being coachable are the number one and number two things that I find to be people being successful.
Oh, that's so good. Yeah. Yeah. They don't realize what it means to treat it as a business. Yeah. If you look at anyone in sports, right, there's playing sports in elementary school
Yeah.
where you don't have to get very serious, right? But as you go to middle school, it gets more serious. You have to have a little bit more discipline. And then you get to high school and if you're on the team, now you have to get much more serious, right? And then you go
Yeah.
to college level, now you're almost like pro level serious, and then you make it to pro level, right? So business success works the same way. And how disciplined you are, how much of a pro you want to be, because maybe to you it could be success means I'm gonna get, let's say, 100 doors that I own free and clear, right? That might be success to you. Or your success could be, I want to have 100,000 doors in a syndication with syndicated partners, right?
Yeah.
Or it could be certain numbers. But the bigger your goal, the more pro level you have to play the game. And one of the things I have to constantly remind myself too, because as business owners, it's very easy for us to beat ourselves up. A big part of success, a huge part of success, is just willing to do it again tomorrow. That's like
I agree. Yeah.
willing to do
So
it again next day.
you got people on both ends of the camp, right? You get the ones that are really driven, beat themselves up. So I talk them off the ledge a little bit. Then you get the other ones I'm tugging along to say, let's go.
Yeah. I want to also talk about, have you seen the ones that, if they're going to succeed, you see them start to succeed pretty quickly? Or do you see any kind of like drag low, go for a while, not much activities, and all of a sudden something happened and it's boom, they're off to the races?
Yeah.
What have you seen?
My most successful people are committed out of the gate, the ones that have the fastest success. They just committed, they're getting their schedule in order. The number one thing, if you don't have that 10 hours or whatever, I don't tell them how many hours. I say, look at your schedule, look at your calendar, make it realistic. Because somebody, I'm going to put 40 hours a week. And they run for 2 weeks and then they're done because they skipped everything else in their life. But the people that come out, they're realistic, they get that on their schedule and they do the things they're supposed to be doing, they have that. And then I have some people that are a little bit slow to start and they have some other things going on, but I commend them for starting, because nothing like just getting started. And their goals might not be the same. They can only commit so much. I'm like, great, you're creating a plan B. Let's get you there. You're going to have options for yourself now and for your family. So let's do what you can do, meet people where they're at. And then that's what will happen to them, Tim, is they'll go to something, but staying plugged in. I always highly recommend to get momentum, like to these sort of meetings or any type of group sessions, because you're going to get one nugget that changes your life. Just that one, because it gives you that inspiration. You hear someone's story and say, oh man, I can resonate with that. Their belief level goes up. So plugging in. And so, yeah, if they're plugged in and they're doing the things, and what kills me the most is they'll go to an event, they'll talk to someone like Jeannie or someone else there, right? And they come back, they're all excited and say, Jeannie told me to do this. I'm so excited. And I'm like, are you kidding me? I've been telling you that for 4 months. And she'll do the same thing. And we joke around about it because she'll have some people she tells them for 4 months, they'll see me, and they go back to her. And so it's basically the coach is there when the student's ready to listen, but that's always a funny thing.
Yeah, it works the same way with kids. We can't tell
Yeah.
we can tell our kids the exact same thing, but when they
Yeah.
hear it from another parent, like their friend's parents or something, all of a
Oh,
sudden
it
it
kills
just
me.
clicked for them.
Oh God, it kills me every time. I'm like, but someone says it, but that's the great part about being around the industry, because they know it subconsciously because they've been hearing it, but they just say it a little bit differently and it just resonates with the timing. So
Yeah.
that's the beauty of just staying, like I said, staying plugged in is key.
Yeah, that's really good. All right, Don, I know that these days you raise money, whether it's a co-GP, fund of fund structure. Do you still also operate your own deals as well, or you just do
No.
fund of fund?
Yeah, I do fund to fund. I love it. And that's what I love about this business is you don't have to do the whole thing. It depends what you want to do. I'm 20 years in. I don't want to do the whole thing. I like having partners. I enjoy having partners. And so, yeah, I have fund to fund with one specific company right now that I do all my business with as of the moment. And I love it. They're actually former students of mine because, as Tim, you got to trust the people you're involved with. And after I coach so many people and seeing different things out there, You just got to know the people, you got to rely on them. Your reputation's on the line. So I had coached them. They went on to do 6,600 plus units and over $1 billion of assets under management. But it wasn't so much that, because everyone has there's a lot of people that have great success. It's that I was very fortunate that I coached them for a year before they had the success. So I really get to know who they were and how they made decisions, how they treated people, which is important, right? Because you're in a relationship when you partner with people.
Yeah, that's really good. You're doing funds with a very
Hmm.
specific operator, and
Yes.
and then you chose them as because of pre-existing relationship. And so you've gotten to know them enough, trust them and such. And that's the thing about what, especially in the cold GP world, the fund of funds world, I think people are a little bit more careful, but for some reason in the cold GP world, people get so excited to get into deals
Yeah.
and they
Agreed.
don't do enough due diligence of the people leading the deals, the lead sponsors. And so
Yes.
let's talk about that. What are
Sure.
some of the ways that we'll talk about underwriting too, but beyond
Sure.
underwriting the deal, underwriting the lead sponsors?
Yeah.
I'm using the word underwriting just to match that. All the due diligence, the vetting process that we do with a lead sponsor. What have you found to be like, what are some of the key things that you look for in a lead sponsor, whether you're investing as an LP or co-GP or fund of funds? What do you look for to say, what if they have these things, I would be more interested in their deal, and if they have these other things, I would run as far as I can from this deal?
Yeah.
Speak to us about that.
Yeah, sure. The first thing for me, anyways, I invested with them. I wasn't planning on getting back in. I didn't know I was going to fall in love with coaching. So sometimes I could have 60 to 70 clients at a time. And so I had that. I had two other businesses. And I just loved what I didn't have to travel a lot and so forth. That's why I got involved, to have options and to make my own schedule and so forth. And so I started investing with them and I was blown away by transparency and what this. So that's one way. Invest with a company. That's a great way to check them out if you're going to bring other people in, even if it's only for a few months, just to see how they operate. But besides that, I like to see, especially in today's world when we have social media and everything, I like being part of a network, but not just being a part of a network. And I learned this when I first got started in the single family business, because I went to my local real estate club meetings and I partnered with someone that went on the first time we were there wholesaling a deal. And I'll keep this short, but it didn't work out. As a subject to, we wholesaled it, didn't know any better. Now we controlled, they went back in foreclosure. So what it taught me was to look at people that are there every single month. And that's why I always, my clients, I'll go every single month. That's how you build credibility. Be consistent so people know who you are and you have something to lose. So whether it's a physical event, whether it's on your network, Tim, RE Mentors network that I was in, you get to learn and see people and they have something to lose, because if they don't do things the right way, and I'm not saying things don't ever go wrong, they do, but once you step up, you fix it and you address it and you don't put your head in the sand or ghost people, right? Which some people get
Right.
nervous. That's what they do, is they communicate. So that's another thing, is being part of the community, watch people and invest with people part of your communities versus a random person online. But if you're going to get in online, I look at their presence, right? I look at their presence. What did they do? Who they involved with on LinkedIn? Who am I connected with them? Try to find some sort of connection. And to be funny, Tim, I know when you were doing one of the events with Dave just a couple months ago, I bought your product, right? I told you that I bought it because Dave was having you at his event. And I said, Dave's having it at the event. Dave must like what he's teaching. So I'm curious what he is teaching. Even though you're always learning, even doing 20 years doesn't mean I can't learn something. And that's what you specify in. But it's who knows someone in the network. So you have another point of reference. I would still do your own and ask them about their business. Ask them if they ever lost money. Did they ever raise capital calls? If they're doing business 20 years, it's hard to believe if they had tremendous success the whole time and they didn't have some adversity, or ask them what adversity they had and how they handled it. Those are the main components I looked at, but I like to have that some sort of one or two levels away from me connection. So I have another point of reference to judge their character, or someone's been in their circle before, someone's seen how they treat other people. Because when you partner with someone, you gotta make sure that you're on the same page.
Yeah, 100%. In today's war, where a lot of deals are having major challenges right now,
Yeah.
and the level of transparency, the level of communication that is needed now is even much more important than when everything was going well. And in some cases, it's a good thing where we get to see the operator navigating through the challenges in a very
Mhm.
professional way. And then we also see the opposite of other other operators that are putting their head in the sand. They're like, everything's great, everything's great. Oh, but now we're gonna have a capital call.
Come from, right?
Yeah, it catch the LPs off guard. And yeah, and I've seen lawsuits happening in
Mhm.
partnerships. That whole co-GP model that was popular in the last few years is just really blowing up big time these days. But yeah, so you in an ideal world is before you either invest with them as an LP or you help them raise as a co-GP fund of funds, talk to other people who have been a part of their deals. Those people would share with you a lot more. I was talking to a friend of mine this weekend and she has several deals that she's in that the deals are in trouble. And she's, Tim, put these people on your blacklist and put these people on your super blacklist. I'm like, oh,
I never heard of a super one.
yeah,
Work spreads, that's the whole thing. And hey, listen, we're investing. There's no guarantees, but giving people a heads up and how you're going to correct the problem. And that was one of the main reasons why I partnered with the people I partner with because of that. I want to hear the good, the bad, and the ugly because it's an investment and you want to just know what's going on. And most of the time, things are great. But if something does go beyond your control, whether it's a property management company is not doing what they're supposed to be doing, or they get bought out and now they don't
right.
operate the same way. There's a lot of different reasons, but just be transparent. A lot of people are afraid of that, Tim. Do you find that? Like they don't want the investors to get upset, but it's better than being blindsided, in my opinion.
100%. I know it's yeah, a lot of people just don't have the emotional intelligence and the like commitment to being in communication. Like
Mm,
this they have such fear of rejection that it shuts them down and they can't just communicate what's going on to their investors. And
yeah,
being a business owner, like communication is, I think, is like the most important part of your
yeah.
business.
Oh, absolutely.
Yeah, you really have to, yeah. Now, I have plenty of days that I wish I can just hire away.
Oh, yeah.
I have plenty of
It's
days
not
that
all sunshine and rainbows.
yeah, I hope I don't have to communicate anything to anyone, but yeah, we do have to step up and yeah, in today's market more than ever, if you are doing anything that has involved other people's money, like investors and such, you just got to up your communication game.
And people
For sure.
understand. That's what I've realized. People understand. I had early on students that didn't. And they're like, "Oh, I'm not getting on the call. I'm going to cancel the call." And I said, "No, you're not." I'm like, "What do you mean? No, I'm not." I'm like, "Listen, that's the worst thing you can do because then people start spinning. They don't know what's going
Oh
on. Where if
yeah.
you said, 'Hey, we had a problem with the management company. They were doing X, Y, and Z. We replaced them. Distribution is going to be less for the next 2 months.'" People are like, "Great. All right." They saw a problem. They handled it. And that's exactly what happened. So they're very happy after they got on the call. But I said, "Yeah, you have to get on. Don't cancel anything because that's never good."
That's such a good one. Yeah, like people are a lot more understanding we give them credit for. That's for
I
sure.
agree.
And yeah, when we're not in communication, they're in their head about what the heck's going on. Like they're making up the worst thing that could be
Yeah,
wrong, just like how you're in your head about the worst thing that they might say to you. So yeah,
exactly. That's where we go a lot of times, right?
by staying in communication and let them know what's going on, be transparent about that. As an LP myself, I have deals where I don't hear from the GP for 6 months. I'm like, wow, that's a long
Yeah,
time to not get
that's a
any
really
updates.
long time.
That's a really
Yeah, it
long
should be
time, right?
quarterly
And
minimum, right? Quarterly
yeah,
minimum.
what happens is it's supposed to be quarterly. And
Yeah.
then so if they miss a quarter for whatever excuse that they have, it goes to the next quarter. I'm like, what?
And then if they're not doing that well in that second quarter, then they push it out to the next quarter. So it becomes a
Yeah.
snowball. Just stay on top of
Yeah,
it. That's minimum
right.
monthly. There's
Yeah,
people we do
yeah.
monthly.
I love operators that give me monthly updates.
But I
And
think it's better for everybody to be able to do that. And then as an LP, you should be looking at it, especially if you're learning the business. You should be looking at that just to see if there's any big variances. So even if they don't communicate it, you'll be able to tell just what the numbers don't lie. And always they put the bad numbers and then they lie. But if they're the real numbers, they're going to tell you, it's going to tell you a story, just like when you buy the property, the T12 tells you a story.
exactly. All right, so let's talk about T12 and
Yeah.
stuff like that. The
All
the,
right.
the stories that underwriting tells. And
Mhm.
so I'd love for you to speak from that perspective of what should we be looking for, number one, like when we're underwriting our own deals, and then number two, when we're underwriting a deal of someone that we're considering coming on as a co-GP or as a fund of funds for, what to look for, what questions to ask, what are some
Mhm.
of the major red flags that we want to catch early on?
So I always like good financials and consistent financials. Having the rent roll match the T12. So when you're comparing them and the data, having all the data, a lot of T12s are missing the income section. It just says rent at the top, right? What the heck does that mean? No, I don't even know. I'm not a reader. I can figure it out through the numbers because of my experience. But so those are some red flags, is not having good financials. If you're looking to sell a property, why wouldn't you make it easy for people to understand it to get a quicker offer versus making it usually means there's something that they're trying to hide. So that's what I look for. And when I'm looking at T12, I'm looking for variances, just big variances in different things, or some of the expenses that are in there that they're commingling or putting their own personal stuff in there just to understand what's going on. So that's the big thing, looking at all the variances. And look how the property's trending. You know, what's been going on. We always look at the last trailing 3 for income and still use the trailing 12 for expenses because things can vary a lot. We're in Texas during the summer, obviously repairs and maintenance and on that electricity bills are going to be a lot higher, or Phoenix, or where the heat is a lot. Looking for the trends, seeing how things are moving there. And in today's economy or today's markets, you want to look for concessions. Concessions non-payment tells you a lot. Have they been trending up? They've been given more concessions over the last 3 to 6 months to know what kind of tells you which way the market's going. Also, same thing with the concessions non-payment. It means they might be evicting a lot of people. It means ask a lot more questions of why it's going up, what they're doing about it, and how they're going to deliver the property. So when you're underwriting, those are some main things that I look at. And then you want to look for value plays. With the high interest rates nowadays, it's harder to make the numbers work without a value play, is what I've seen. So you want some sort of value play on the property. It's great because a lot of 1980s product needs renovating at this point in time. A value play is something else that would be good. And if you want to be conservative or mitigate your risk more, stay with conventional financing. So it's 85% or above stabilized property. You can get Fannie Mae, Freddie Mac financing conventional. Those are some things on that side to look at. Now, if I'm looking at other people deals or the syndicators or the sponsors or someone's bringing it and you're going to go in as LP, look at the expenses. We've always had rules of thumb, industry standards. And what I say is those rules of thumb to tell you how to run a property effectively. So could the seller run it like below, say, repairs and maintenance at $100 a door for a year? Yeah, but that just means you're going to have a lot more later. It costs a certain amount every year to run a property. So you want to make sure that you're looking at rules of thumb to see, hey, do these expenses make sense? Do the ratios make sense? That's one big thing to take a look at. The other big thing for me is speculation. How much are they speculating? You know, how much is coming from cash flow now and how much are they speculating for later? And is their speculation risky or very way optimistic, right? So those are some of the things that you can do. And you can do some research on your own pretty easily. Tim, with AI, obviously, right? You can do some generic research there. You can look at market reports from Marcus and Millichap or any of the other big firms to get a gauge what's going on in the market and see if what they're sharing lines up, right? Those are, yeah. So those are both sides, whether you're being an LP or you're doing your own, those are the things that I would suggest looking at.
Gotcha. Yeah. And talking about AI, I started using AI to do research in the local market where the property is. I start to have it do research even into Google reviews, look for red flags based around the reviews, compare that with other properties in the area with the same vintage to see, okay, are these consistent for the market, or is this just this one particular property that all of these issues? So yeah, like these days, almost all AI tools these days can. It used to be I used to use Perplexity for that, but now they all have access to the internet now, whether it's ChatGPT or Claude or Grok or whichever.
Yeah.
Yeah, they all have access to the internet, so they can do those deep research for you. I also feed it the whole CoStar reports even and have it.
Oh, that's a good idea. I haven't thought of that one.
Yeah, have it to go through all of that. But yeah, yeah, there's so much more that AI can help us with underwriting these days. What are you currently using AI for?
Yeah, I would say I'm a little bit behind the curve in AI, and I just started using the last 6 to 9 months. I actually created an RV park underwriting template, and I used it for a lot of that to do my research. It took me about 60 hours to create it, but I used a lot of AI. But the key what I find with AI, and like you said, Tim, you were using it in your market where you knew the property. If you know an area, try AI in that area so you can cross-reference and have some other data points, some other third party to see how accurate, because you might have to tweak your prompts and so forth to hone it in a little bit more. But I'll use it for those sort of things, like mostly a lot of market research or understanding cap rates, cap rate trends, rent trends in the market, what's been going on there. And those will be the most part, but I am working on some things as far as to use it more efficiently with T12s, with rent rolls. And I'm going to build it part of my, actually, as into my program over the next month and a half after doing the 3-day that we were both at. That was a lot more eye opener that. So I'm going to use some of the education I got from it because, again, we're always learning. We're trying. I've been doing this a long time, so we get set in our ways a little bit, and it works. But, and I also said, you really want to understand the underwriting. AI is great to save you time. It's like an assistant is the way I look at it. Maybe you look at it a little differently, but I look at it as an assistant to save, optimize my time, be efficient. But I know the underwriting. I know what it's supposed to be spitting out. So you want that balance and not think, oh, I just started out, I'm going to use AI and it's just going to spit out everything. Because if you don't know what it means, then it's hard to know what to use and what not to use.
Yeah. And if you guys haven't yet played with it and you don't know what all the capabilities that can do, you can just ask it. So let's assuming you're using ChatGPT. You're like, hey, I want to utilize you to help me underwrite a multifamily deal. What are all the things that I can ask you for or have you research on to help me underwrite a deal? And they'll tell you. And even if you don't know how to prompt it, you can just say it like you would say to another human being, right? It's, hey, how should I prompt you to get the best result for this thing that I'm doing? And they'll give you the prompt that you need to give it to it.
I don't do that enough, so I'm glad you reminded me again to even take it to that level where just asking it what it wants, so what you're trying to do. That's super powerful. That'll save you a lot of time.
Yeah, I don't do that all the time, but I do it when it's not giving me the results I'm looking for, or if I think that this is a important enough topic that I want to dive deeper into that. And then I also use multiple different AIs to compare their results as well. And yeah, AI is definitely going to change the whole game for underwriting and analyzing deals in the very near future here. And then pretty soon we have all the drone and stuff that are gonna be able to get access data from drone, like due diligence. We don't even have to walk the property anymore. The
I know.
drones will
And
do
right into the B unit.
diligence.
Everyone's going to leave their door and windows open so it can fly in and fly out.
Yeah, AI is definitely fascinating. All right, so we talk about what it takes to be successful. We talk a bit about vetting the sponsors, vetting the deals, underwriting the deals, and let's talk a bit about how you raise capital. Who do you raising money for your deals, or when you're doing fund of funds? Who are you raising for? Who's your avatar? Or do you have an
Yeah.
avatar, or do you just
Yeah,
raise money?
I just started doing social media last year, 2024. And the avatar I'm looking for is a professional, right? Because we do mostly 506Cs, so they need to be accredited. So making 200,000 more or have $1 million in assets. I like people that are a little bit further along in their career, 45 to let's say 65. Get over 65. And these are guidelines. So you can be 70. It doesn't have to be. But the guideline is because as you're retiring, you want to maybe put your money where you can just get a 10% return.
Yeah.
And you can still do that with some of these syndications as well, but not all of them offer that, where they just get 10%, you're higher in the capital stack. But I would say the sweet spot would be 40 to 65 or 40 to 60 is what I look for. And I'm looking for professionals because we're trying to narrow it down. It's just like going for single family homes, Tim. What are you looking for? Your targeted market, people in a motivated situation. And this, we're not looking for motivated situation, but we're looking for people that have some capital because they can diversify. They don't have to put all of it in with us, but they'll have enough to be able to diversify. They'll be accredited investors. And that's typically my avatar and what I like to focus on.
Gotcha. So when you say professionals, so everything including business owners, doctors,
Dentists, lawyers,
CPAs.
doctors, yeah, the nurses. And so, yeah, I would say those are the main, but I like business owners a lot too, because with business owners, they understand risk a little bit more. They also don't have an active 401k. A lot of people in corporate America make good money. They have a couple million, but it's in their 401k and it's active, so they can't use it. So I like business owners for that reason because they have a pile of money they might be an average 7% on, but they can turn it over and invest in alternate assets like real estate.
I see. I was surprised to hear you said you started social media only recently. You said last year. I'm like, wow.
No, as far as raising money and being actively putting stuff out there. I have a big real estate network too. Coaching that many people and knowing everyone in the RE mentor community for 20 years, I have a big network within there that I already have credibility with. I already know they want to get in multifamilies. So it's having a target market. And not everyone's going to have that, obviously, but that's why you want to be part of this network and continue to be part of
Right.
network so that way you can get there.
Yep. And talking about network, you're gonna be there at the next Ultimate Partnering events
Yeah.
that were
Yeah.
that that we're having in May 15th to 17th,
Yes.
2026. Yeah,
Yes.
Don's gonna be teaching about underwriting, and he'll share more about his cool underwriting tool that he created and stuff like that too.
Yeah. I'm
Um,
excited.
yeah, me too.
That's the
Me
best
too.
bet here. It's not for multiple reasons. It's ultimate partnering for a reason, right? Like you
Yeah.
said, I'm planning on there being over 1,000 there based on the past and because of what you guys are doing and being Dave's last one and everything. And I'm super excited. I love it too because when you're part of the community that long, I have a lot of students that I hadn't seen in 5 years, 7 years, get to see how they're doing. Or maybe it was bad timing when they joined the program and they're getting back in again. But it's a lot of fun. You meet so many people. You're around like-minded people all weekend. So yeah, I'm super excited, Tim. I know everybody was asking after the last one if there's going to be another one. It's going to be a great event.
Looking forward to that. All right, Don. For those that want to reach out to you, either learn from you, learn about underwriting, learn about capital raising, learn about whatever they want to learn from you,
Yes.
or potentially partner with you, where would you like to send them?
Yeah, can I just put it in the chat?
Yeah, of course.
And
Yeah.
but I'll say it as well. But so yeah, you could just my email is don at nextlevelcapital.com. It's in the chat, and my cell phone's in the chat. That's the best way to reach me, either one of those avenues. You can text me as well. But during the day, it's best to email just because I check my emails like twice a day. I practice what I preach 2 or 3 times a day. I'm on my emails, but I'm sitting down. Like I'm little, remember the engineering side of me, Tim? I have 15 different emails because for my business email, it's just business. For my coaching, no one has my coaching email for these last 20 years except my students because when I go to it, I want to focus and I want to know I'm going there to do this. But
Right.
anyway, so yeah, that's the best way to reach me. I put that in the chat so you have it. If you don't have it in front of you, if you're on the phone, my cell is 401-450-5200. Again, 401-450-5200. And my website is the same as my email. So you can check that out
Yeah.
if you'd like to as well. Currently raising money on Class A. We mostly focus on Class A properties and some Class B. But yeah, that's how you do it.
Yep, awesome. What you mentioned about your email, like having different emails, I started doing that with my phone too, where all of business related, I tell them to WhatsApp me. So that
Yes.
way, like I know when I go to WhatsApp, it's all business.
That's
There's
a
no
great
personal
idea.
in it. Yeah.
I'm
And
already learning stuff from you, Tim. I love it. Yeah, I've already written down, so I hope everyone else is taking notes because I know I am. Because it's these little things that make such a difference in your efficiency. We just did it a little bit differently, but I think I'm going to do it because my regular text gets so jammed
I
up.
know.
Yeah, so that's
Yeah.
a great idea. I love it.
Yeah, so I started doing that. But yeah, there's a lot of things I like about WhatsApp, including just the ability to send attachments and all of that stuff
Yeah, I
is
love it too.
really
That's what I use for my program is we have a chat group and it's so much easier to create groups
yeah.
on
Yep.
and so forth.
Yep, exactly. Don, thank you so much for being on our show today. Really appreciate you. Yeah, you've been a huge amount of wisdom and knowledge for all of your years and doing the business yourself as well as mentoring so many people. I want to publicly, I don't know if anyone ever done this for you, but on behalf of 1,800 plus students that you have coached, I acknowledge you for the difference that you make in all of those lives and their families, and who knows how many generations that has impacted because of your coaching and your mentoring for them. So, really kudos to you and thank you so much for your generosity and your commitment